This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. K-State grain economist Daniel O'Brien kicks off today's show as he shares about the cash, futures, and trade for the grain market. He also says what growers have had the most concern about. Jason Warner, K-State cow-calf extension specialist, continues the show as he discusses what cattle producers should evaluate when deciding on replacement females. He also mentions an available tool. Concluding the show is K-State meteorologist Chip Redmond as he explains what winter weather people in Kansas should be prepared for. That and more is coming up ahead. You're tuned in to Agriculture Today, and we start our Friday show with the grain market update from K-State grain economist Daniel O'Brien. Daniel, thanks for joining us today.
Thank you very much, Shelby.
Daniel, wanting to have an overview of the grain market, looking at cash and futures, and what are we seeing?
I think in the response that happened in the last bit of time since the January 12th report and the fall off that happened, especially in the corn market on that day, I think that we didn't see grain futures fall farther, but rather go sideways to higher for these major commodities we're watching is telling. In fact, in comparing where the futures and actually the cash prices were compared to about 2 weeks ago, it's as if we absorbed a 20-cent lower move and just kind of stayed there. Not a lot of change since that time. There'll be other bits of information coming up in the future. I think it's fair to say that until we get out to at least the USDA Outlook conference, I don't know there'll be a lot come out of that. Well, there'll be nothing coming out of that'll involve farmer surveys for planting intentions or anything along those lines. So absent any hard numbers out of the USDA, which we won't have any again for a while, any surprises that could come from overseas in terms of trade movement or any adjustments in the usage side of all these balance sheets, we're looking towards having prices move somewhat sideways. Now, and by saying that, Shelby, we've just sort of set the stage to have that not happen, because the markets do tend to have more information coming along all the time. And we have enough going on in terms of foreign trade and trade agreements, countries either opening their doors to the U.S. or closing them, that we'll wait and see how all that occurs. I would say when you look at where the futures have closed at here recently, that here on Thursday, the 22nd, yesterday, March corn at 424, and actually as the closing price, and we've been around 420 or so for a fair amount of time. Not a lot of change there. Been watching the new crop bid at 450 and a half. So if the current price is 424, new crop bid is 451. I think that's an indication of uncertainty yet in the crop production conditions that'll happen in the United States. And that basically 25-30 cent differential is small relative to what could happen if we actually had any type of issue or problem in production. But so we'll see. So the market's acknowledging we still have issues out there that we'll have to work through. And this time, really nothing explosive at all happening. We're assuming normal conditions until we get out into spring. Really the same story pretty much for soybeans, although the differential isn't as much between the upfront lead contract, which is now for beans, the March 26th contract, and the November 26th harvest contract. Again, March 26th closed yesterday at 1064, new crop November at 1077. Not a large differential, still some uncertainty about all of that about what will happen in terms of acreage. This year, a lot of discussion in the trade that of a kind of a soft expectation of, well, maybe we'll have more soybeans this year as opposed to corn. But that really remains to be seen. So much now is going to depend. Now that we switched away from 2025 production and supply issues to usage issues, again, what will the pace of usage be? I just would note that for this week that ended January the 8th. The last numbers we have out of the USDA for exports, that the soybean export number, pretty strong, I think, at least as we calculated here. You're looking at a week with soybean exports of just over 60 million bushels and need a pace of about 28, 29 to meet the USDA's expectations. Of course, what looms out there is the approach of the South American crop. So we'll see. But as we stand right now, still some pretty good pace of soybean exports. And since we're talking about exports, wheat exports for the week ending January the 8th, soft compared to what we had been in previous weeks. The hard red number, again, out of Kansas, 2.9 million bushels exported. We need a pace of 5.4 to meet the USDA's projection. But that number's been bouncing up and down for a while. So in terms of whether we are ahead or behind of what's needed to meet that USDA's projection for hard red winter wheat, about 320 million bushels. So we'll see. And on the export side, export usage for corn came in at 61 million bushels. Again, really pretty strong. Well, very strong historically, but we're aiming for a target that's even stronger historically, 3.2 billion bushels of exports, a lot of it going a higher than normal proportion of that going to Mexico, dealing with the screwworm cattle feeding issue that's driving a fair proportion of cattle feeding down there. So that still remains strong as a supportive issue in the corn market. It's kind of surprising that given we have a 17 billion bushel corn crop, that we're seeing prices not lower than they are. Again, 422 times the past, we've had over 2 billion bushels of carryout. 2.2, some would argue it might end up closer to 2.5. We see prices even lower than this. So usage for exports strong, usage for ethanol. It's had some pretty strong weeks of late. Feed demand still intended to hold up. So we're in the mode where we're, even though we have larger stocks, a lot of it in storage, waiting for something better to happen price-wise from farmers. We're still at the mode where we don't have just horrendous prices. In looking at that, as you look at what the cash prices are showing, you see some, I guess, evidence of some, I guess, sparking movement to the high side. People filling trains, et cetera, different places. Cash prices for corn across the state, that's telling that in Garden City, the highest price that I could see listed in the sources that I have is about just under $4 a bushel. So interesting to see that. The actual highest price in the state is in southeast Kansas, in the Pittsburgh area, at $4.14. So it says something about feed usage down in the southeast part of Kansas and further on down that direction. So a lot of other cash prices. Again, Garden City $3.99, Topeka $3.89, $3.76, both Colby and Salina. Hutchinson $3.79. So interesting to watch. On the grain sorghum side, we've seen a spark, a move to a little bit higher pace of grain sorghum exports, which would be consistent with the U.S.-China trade agreement. So that's certainly worthwhile watching and offers some hope for grain sorghum producers who have sorghum in storage waiting for something good to happen. China coming to the market to fulfill their promised purchases of just under 200 million bushels would be that good thing. So we'll see where that goes. But interesting, in the Hutchinson area, you have one or two major elevators that have jumped up their bid to about 369 to separate themselves from other bids around the state. Next highest bid, Salina at 334, 332 in Pittsburgh area, 329 in Garden City, 309 in Colby. So I think when grain elevators in Kansas and elsewhere are filling trains, trying to gather supplies together, you'll see bids like this jump up, particularly in central Kansas. So that's worth watching, and frankly, good news in the grain sorghum industry. And you've got similar things happening in the soybean industry. You have one bid in the Topeka area, one top bid at 1019, and other bids not too bad. Against Salina, 989, 994 in Hutchinson, 989 in Pittsburgh. But again, different places that'll have an aggressive bid above the others. The issue will be, will that bid still be there next week, or will they come back together? So somebody is trying to gather beans together to fulfill an order. And then for wheat, just interesting to watch where we're at. Top price 491 in Salina, 491 Topeka for current cash bids, 486 Hutchinson. Other bids, again, Pittsburgh, in the case of Southeast Kansas, the hard red winter wheat bid down there is not the highest one in the state. 421 is what I'd seen. 436 coal beef, 441 Garden City. You do see the highest new crop bids, 524 again in South Central, in Salina, Topeka area. So interesting to watch. Just lots going on, and a lot of a fair amount of concern on farmers' parts. We had if you don't mind, I'll go ahead and just mention, we had this Cover Your Acres conference in Oberlin this past week. A lot of concern about grain and storage that farmers have, wondering about prospects for storage to return, wondering also how any government payments that could come into farmers' hands may slow down cash sales, and actually you have the possibility of pushing back those sales off into the spring and having an impact on the market. So lot of concerns. I'm always surprised by how well informed Kansas ag producers are, and asking questions about different aspects of the of factors that could lead to higher or lower prices that the best market analysts would be challenged to answer questions on. So without question, lots going on, lots of thought given to where markets are going, and especially now after fall harvest, about issues of having to do with grain in storage and what the prospects for profitability and how seasonality might help them.
Daniel, I appreciate you taking the time to join us today.
Thank you very much, Shelby. Take care.
That was K-State grain economist Daniel O'Brien. We're cutting to a short break now, but we'll be right back. You're tuned in to Agriculture Today, and we continue our show discussing if cattle producers should keep or maybe get rid of their replacement females. And then to talk about this, we're joined by K-State Extension cow-calf specialist Jason Warner. Jason, thanks for joining us today.
You're welcome, Shelby. Thanks for having me on as always.
Jason, as we're thinking about replacement females, what are a few things for producers to consider?
So really, I think as we come into this time of the year here, right after the first of the year, there's a lot of discussions and a lot of decisions that are being made right now for a lot of our producers with regards to female retention decisions. And certainly, I think as we look forward into this year here in 2026, a lot of optimism for just where the fundamentals are for the cattle market. And we think about how tight our inventory is from a female standpoint. And as we think about where feeder calf prices are and where expected female prices are, I think a lot of really, really good optimism for the cow-calf sector of the beef industry as we come forward into this year. And really, I think it's important for folks as they think about those female retention decisions. Those are really, really critical because, as you think about bringing a group of females back into that cow herd, they have a really substantial impact on the economics of that cow herd. When we think about the initial upfront costs that we have on those females, their investment costs, because they're a long-term capital and investment that, we make the decision to bring that female or that older cow into the cow herd. And our initial upfront investment cost on her is very important because we want to try to make sure that we can get a good rate of return on our investment and on our money there that we put into that female. And so I just really think that now is a really good time of the year for folks to be thinking about their goals and their plans for this year. Some folks have already made their female retention decisions, and other people still may very well be in the time frame where those things and those decisions are going to come to fruition for them, and they're going to evolve here over the next several months as things develop. But I really think now is a good time to be thinking about long-term goals for your operation. What type of growth do you want to have? Is it a situation where you want to try to expand on the number of productive females that you've got in the cow herd, or are you going to be looking to basically maintain the numbers that you have? Everybody's obviously in a much different situation like that, and that is one of those things where everybody's situation and their approach to growth in the cow herd and where they want to be in the business varies. But regardless, I think it's important to come back and be thinking about, strategic retention decisions and knowing where females are from a cost standpoint is going to be really important as we move forward here over the next couple of years.
When producers are thinking about these strategic decisions, you mentioned the cattle market, but it's important to look at other aspects related to livestock care as well.
Yeah, absolutely. I think on these females, when we're thinking about retention decisions on these females, the projected market is one side of it. But on the other side of it too, we've got to have a good handle on what our costs are and being able to be honest with ourselves with what our production costs are really that's a really important thing to do. That rate of relative return, it's all dependent on whatever our income is relative to our cost structure. And as we think about bringing a female into the cow herd, her rate of return is to an extent going to be reflective of whatever our annual production costs are, whatever it costs us to run that female. And so, if we can run that female cheaper, our rate of return is going to be a little bit better. But if we have higher production costs on her, our return's going to be less. So that's certainly something that we got to make sure that we're thinking about. And then just knowing what our production level is. And with regards to, cow-calf systems, we're typically thinking about weaning weight, of course. But then also to, thinking about, death loss and interest rates and those types of things. Those are important parameters and things that influence, long-term profitability in that set of cows. And one thing I want to stress is that, you think about you've got a set of females that you work with in your cow herd, but every age group or age class that you have within that group, you've got your 2-year-olds, your 3-year-olds, 4-year-olds, so on and so forth. Every age group has got a different initial investment cost that you have when you bring that group of females in, because it varies every single year, right? Based on what the market conditions are.
Is there a tool available through K-State that can maybe help cattle producers make these decisions?
So there is, and then one thing I really wanted to highlight today is a really nice spreadsheet tool that I think does a really nice job of helping us get our arms around some of these variables that influence the rate of return and our expected profit or loss in our production system as we think about keeping these females back. We've got a KSU beef replacements spreadsheet tool that some folks over in our Ag Econ department put together a few years ago. I and a few of my other extension colleagues here at K-State really like to highlight this tool with producers, especially when we're given heifer development talks, because it does a nice job of breaking down the rate of return that we might see with a group of females from a year-to-year basis. So it's on our AgManager.info website, but then we also have a link for it too on ksubeef.org, which is our beef extension website that we have. And so KSU Beef Replacements tool is what it is. Real handy spreadsheet that's really simple and easy to use. And essentially what it does for us is it allows us to be able to calculate out a net present value, okay? Net present value, which is a term that we use for essentially just the value of the female if we're going to take the opportunity cost and invest that in and get a rate of return that's equal to if we took that female and just invested that money elsewhere. So if we said, okay, I'm going to buy a set of replacement females or keep a set of replacement females back, and I want to get a 5% return on my investment from that group of females. Well, what it allows us to do is be able to calculate out the purchase price that could be paid for that group of females, such that if we took that money and invested it somewhere else, we get a 5% return on our investment, is essentially what that allows us to be able to do. I think it's a really simple tool to be able to use. Really, the most important things that you got to be thinking about with it is that you need to have a good estimate of what you think your production costs are to run those cows on an annual basis. But then also, too, we need to have a realistic expectation of what we think feeder calf prices are going to be worth over the lifetime of that female. And so, really what we do with this tool is we'll put in some constraints, and what we'll do is that calculator will generate out a net present value, or essentially a break-even value for us, that gives us a good indication of how much we can afford to spend on a group of females over the lifetime of that female as we think about keeping her into the herd. And so, one thing that I think is really valuable with it is if you want to look at a scenario where you say, okay, I've got a group of bred females, coming 2-year-old bred females, and I'm going to bring them into the herd as coming 2-year-old females, you can look at that scenario. If you want to look at a scenario with a group of middle-aged cows that you might buy back, that might have a little bit lower upfront cost, but maybe a fewer years of productive life in the herd, you can look at that scenario. There's lots of different ways that you can evaluate, bringing those females back into the herd. But you have to have a good estimate of what you think your production costs are, and then you can do some what ifs with regards to how much weaning weight production you think that you can get out of that set of females over the lifetime of a group of females that you keep them in that herd, and does a nice job of showing essentially, okay, accounting for some depreciation, how much the value of those females change over the course of their lifetime. So, as I think about it, I think coming back to, the value of it for producers is okay, if you can work with some estimates for what you think that you have for production costs, for some of these other variables that you need, gives you a really good ballpark number for, okay, if you're going to go out there on the market and you're going to invest in a group of females and bring those females back, well, where do they realistically need to be at cost for you wise? We think about bred females right now, these 2 and 3-year-old cows, anywhere from $4,000 to maybe $5,000, depending on what they are. And we've seen a wide range in prices here, but prices are relatively strong. But it gives you essentially a benchmark number to work with. And so if you say, okay, yeah, I think I can afford to spend up to, maybe $3,750 on a group of females, well, if that allows you to have a good estimate of what you think your budget needs to be, that allows you to avoid overspending on those females and having more upfront investment costs in them as you go forward. So I think just a really nice tool that we found really valuable for producers as we kind of navigate some of these retention decisions as we go forward here. And we've got a nice article that we put together here that was in our Beef Tips newsletter that came out after the first of the year that talks more about this tool and how to apply it. And so I encourage folks to take a look at that as well too for more information.
Jason, I appreciate you taking the time to join us today.
Thanks, Shelby. Appreciate it as always.
That was K-State Cow-Calf Extension Specialist Jason Warner. I will link that tool in today's show notes on agtoday.net, as well as the Beef Tips newsletter titled Cost Considerations for Replacements. We're cutting to a short break now, but we'll be right back. You're tuned in to Agriculture Today, and we conclude our Friday show with a weather update from K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, as we're thinking about the weather for this upcoming week, I feel like there's one thing on everyone's minds, the winter storm, and what can Kansas be expecting?
Everyone should be prepared. That's the biggest thing. No matter what we expect, everyone should be prepared. You should be just mentally prepared, physically prepared with shovels and fuel up your vehicles. I wouldn't say go to the store and get bread and milk, but people have already done that. So just be prepared. And no matter how much snow we end up across the state, this is winter. We need snow in the winter time. We got lucky with that moisture event earlier in January that brought us all but Northwest Kansas moisture. And this is going to give a little bit to the Northwest, but also give a little bit to the rest of the state. Not a ton of moisture is going to come out of this. I'm thinking about moisture as a whole, not just, the snow totals are going to be great, but we want to know how much precipitation actually falls through this event, because that has a big impact on the drought monitor and our overall soil moisture. We need moisture this time of year. So as we look at this forecast, we expect a fair amount of snow across most of Kansas. The highest total is probably a foot or so, and that's going to likely be in the southeast. There could be some in central Kansas as well, but the moisture amounts will be up to as much as a half inch of liquid equivalent in that precipitation where those 12 inches occur. As you get further north and you get further west, those amounts are going to taper off. I expect a pretty tight gradient along the Nebraska border and even along the Colorado border with only maybe a tenth of an inch. The other big story is the cold. It's going to be really, really cold. So while we're not talking a lot of liquid precipitation, we're able to squeeze out that moisture from the atmosphere very efficiently and get a lot of snow for not a lot of moisture. And so that's why a half inch of moisture equal to maybe 12 inches of snow. That's a really high snow to liquid ratio. And so it's going to be a very powdery snow, a very dry snow. The one exception will be if you do see a little bit of freezing rain or sleet. Again, highest probability of that in the southern part of the state. I don't expect much to accumulate, but you get a little bit further south from the Kansas border, potential for a big ice storm, and that's going to also trek off to the east as well into the Tennessee Valley. Another good component is that we're not going to have a lot of wind. Our winds are gusty post-frontal on Friday, but as we get into Saturday, when the main core of this snow event is ongoing, only light northeasterly winds. And with this cold, temperatures are going to struggle to get above zero for most of the state on Saturday and really even on Friday and potentially again on Sunday. As we move forward, I think we will see the clouds break on Sunday afternoon. That will allow temperatures to kind of squeak back up, maybe to 10. And that'll hopefully allow for some compaction. The snow's really dry, so it's going to shrink down pretty quickly. It could go from 12 inches to 6 inches rapidly with not a lot of solar input or our solar radiation's increasing as we're going into January. And so colder than normal and definitely a wintry weekend in store.
How long are we going to have to deal with this?
Basically, Sunday when the clouds break, it's going to be pretty nice next week. Overall temperatures are going to gradually climb. The question is, how much do they climb? With these heavier snow amounts, yeah, it's going to compact, but it's going to take a while because there's such a large area of snow. We saw that snow in southwest Kansas a week or so ago quickly erode because it was such a narrow island, such a small island of snow. This is snow cover over basically the entire state and most of Oklahoma and all of Missouri as well. So widespread snow is going to keep those temperatures down, and it's going to result in a longer duration, cooler than normal period. I think we hit average temperatures by the middle of next week, and then snow finally starts melting completely off by the middle of next week. And then temperatures will stay about average and then gradually climb as we get into February. Overall, though, when we look at the precipitation component, this is probably the last storm for a little bit. Looking at the extended forecast, I don't really see any signs until maybe early February. In that first week, we might have a weak system come through. But overall, dryness looks to be the rule as we end the month of January.
Chip, I appreciate you taking the time to join us.
Yep, thanks for having me.
That was K-State meteorologist Chip Redmond. That's all we have for you this week on Agriculture Today, but we'll be back with more for you on Monday.